Good morning, good afternoon, and good evening. It's 6:31 p.m. Saturday, December 2nd. It's already December. And welcome to the latest episode of our mini mini talk show. Again, this is Mark Yu,
This is Wawi Santos on episode 90.
and episode 90. Yes, we made it to 90 episodes. So it's there's no financial, incentives behind as to why we're keeping tabs on this, but I guess it's, we just me and Molly just want to share our passion in the stock market and research stuff. So we try to do this on a weekly basis, and right now, right today, Saturday, is no exception. And I appreciate your time today, Wawi, since
Yeah,
we're able to connect.
yeah, we just want to inspire people and invest and, you know, uh, be happy and be wealthy.
Right. And I think our last episode, we fetched in a little bit of higher count in terms of views. Oh, so that's a
Wow.
little bit of a, of a good sign, I guess. But regardless, we're both healthcare workers. We don't have any, what do you call those?
Financially,
Financial, yeah. But we do take a deep dive in Wall Street reports, news, and data. So we kind of at least have some sort of a gauge. At least for the couple of years now, we've been doing this since the
oh,
pandemic. So
yeah,
slowly
two
reaching
years,
100.
man.
Yeah,
Woo.
time flies. So on we go. So for the first one that we're gonna first stop is the American Association of Individual Investors. Their sentiments, whether if the stock market will go up, down, or sideways. So they publish once a week, every Thursday, close to lunchtime. So for this week, 11/29, 48.8% thinks the stock market will go up. So as you could tell, it's been trending up. More and more people are thinking the stock market will go up. Right now, we're closing in on the 50% mark. And this is the highest that we have been for the past month. While the bearish investors, they are now slowly hibernating in December. So they're down to less than 20%, 19.6. Whereas a couple weeks ago, they were at 28%. So neutral investors still neutral, at least a third of those who have been surveyed. So a lot more bullish sentiment, a lot more positive, a lot more upside that people think that's going to happen in the next few months. So for the fear and greed index, we see that yep, we are at greed territory, 67. Not much of a difference from last week's recording at 66, but that was a jump because a couple of weeks ago it was close to 50s, I think, a little bit less greedy. But right now we are at greed territory for sure. Market momentum. This is the chart that we have been, slowly tracking, closing in. So you can tell there's a lot of momentum to the upside. It's gone up vertical again. So this is the S&P 500 versus this 125 moving average, 125 days of moving average. So that's like 4 months. So we have definitely pierced through it November 8, 9, and we never looked back since, believe it or not. We are at nearly 4,600. S&P 500 is near 4,600, 4,594 to be exact. And according to Bloomberg data, we are 5% away from new all-time highs. Can you believe that, Wawi?
Well, just a year ago, we were thinking we're going to hit a recession soon.
Yeah,
And this is quite a surprise.
exactly.
The economy just keeps showing some good strength all the way through. You know,
Yeah.
I mean, it's good to be pessimistic at times, but to measure risk. But this is really quite a surprise for me.
Amazing. Yeah, indeed. We know, meanwhile, we have been recording, diligently. We just don't throw out, stuff out there. We base it on news and data. And I think, correct me if I'm wrong, a lot of experts are actually predicting a recession.
Yeah, even Jamie Dimon right
Yeah.
now is still predicting one.
Yeah.
Yeah,
Well, if not the largest bank, in the United States is predicting a recession. And not only him, a lot of investors, a lot of experts are showing that. But regardless, I guess we have been actually, if you're going to take a look at our recordings, we've been using the same logo for the past 4, at least 4 episodes. So it means for the past month, we actually have been going to the upside. Regardless, we have been going up. I think we lost Wawi there, but hopefully we get him back in a little bit. Wawi's out on a not in his home at this point, so we're doing this on the fly. But going to stock price strength, you could tell that net new 1-year highs have been slowly increasing. We're up on the positive side of things. We have never actually tracked this on our previous recordings. But hey there, Wawi, welcome back. Thank you for coming back. So I was just telling our listeners that even the stock price strength, the new 1-year highs on the stock market have pierced through actually 0%. We're now on the positive side of things in terms of new stocks making 1-year new highs. So also this adds to the momentum going up. So for the put and call options, you could tell if this is above 1% or at 1, people are bearish. But right now, it's still going down now at 0.78. So not a whole lot of people are buying protection on their portfolios at this point in time. The volatility, Wowie, it's really down there right now is 12.63, and for the past 5 days it's down 3%. So that kind of explains why, well, the stock market, the S&P 500 is nearly flat, 0.87. But yeah, if we're going to take a look at the tech, it's also the volatility in the Nasdaq is also down 3%. But if we're going to look at the index itself, wonder if it did anything. Oh, okay. So a little bit chill for the past 5 days on the market. Would you agree, Wawi, or what do you
Yeah, I
think?
think the impetus there was Jay Powell's statement.
Mm-hmm.
It took them a while to digest, but by the end of trading day on Thursday, I think the investors are pretty much priced in that there's not going to be any rate hikes anytime soon. And I
Right.
want to segue a little bit about Charlie Munger. Rest in peace to the great man. Uh,
Yes.
that partners up with Warren Buffett.
Mm-hmm. He's also
Want to
well
let our
as
listeners know that he
wa-
just passed away.
true. May he rest in peace. Yes, he's also known as Warren Buffett's sidekick. The one you shared on the group, the abominable no man.
No one.
Yes. So he's a man of intelligence and amazing depth of knowledge, and yeah, I like his sayings. Like it's very straight to the point, and he
Yeah.
doesn't scare away of saying things that's running in his mind. I just read an article too earlier about him, surviving when he was being interviewed days like days before or months before he passed, like recently. And the thing that he recalled on one occasion that he survived a dog attack, whereas like him, he was playing with a little girl, and well, he was also a little boy in the playground during that time, and the dog tried to bite him, but ended up scratching the little girl. And the little girl back then, we didn't have any rabies shots or anti-rabies, I think, and the girl passed away.
Oh
And
no.
ever since then, I think he's been thankful on those type of occasions, and like he doesn't, like every opportunity he's been grateful for. So yeah, such a loss for investment community. For those who are book readers, heavy book readers. I heard that they're gonna release an updated Charlie's Almanac, poor Charlie's Almanac. So it's
Wow.
kind of a resemblance to Benjamin Franklin, I think, book. But yeah, really
Well,
good.
I can't wait to read that. It's definitely enjoy a lot of his sayings and a lot of the things he shares with his listeners.
Yeah, he
There's a lot of
awesome
wisdom to that old man.
for sure. Yeah, 99, passed away at 99. Yeah,
Uh,
so going back to what you said, Wawi, you're right. December 13th, there is 98.8% chance that the Federal Reserve will keep the interest rates flat. So it's for sure that there's not much tightening that's going to happen this month. And who knows, this may be still one of the propellers for the Santa Claus, the long-awaited Santa Claus rally this month. So yeah, for the past week, real estate, interestingly, is the best performing sector, followed by basic materials. Basically, each and every sector is up, except for energy and communication services. For the past quarter, 3 months, technology is actually still the best performing sector. The worst performing is energy. Since the start of the year, technology, obviously. And since the start of the year, there are only three sectors that are in the red. They are the utilities, consumer defensive, and healthcare. So those that are supposedly for a recession or good uh, companies or sectors to invest in during a recession are the worst performing sectors this year of 2023. Would you believe that? Whereas late last year, I know while we've been talking about a lot of experts saying that buy utilities, buy healthcare, because we're going to go into a recession. But if you follow that, it wouldn't be a good year for your portfolio for sure.
well, they said if you stuck with the 60/40, you would have done really well uh, uh, these past 2 years. So,
True. I did see that. I think I saw where I think we're having technical issues with it in terms of fund flows here. But I did see that the 60/40, yeah, it performed the best since 1991, right? I think that was their
1981, I think since 1981.
yeah.
So that's quite a feat.
Mm-hmm.
Well, bonds made a big play, especially treasuries, um, early this year. And now bonds are going down again. So people are moving back into equity and stock. Um, so there's quite a rotation, and that's why we're seeing the movement away from utilities and all these defensive sectors and going back into real estate. I'm hoping, the interest rates are going down, some of the prices are going down, home prices. So that should help some of the millennials that are needing homes right now. There's a big demand from millennials to get homes, but there's not enough homes on the market for them to buy. Plus, it's restricted. The prices are restricted.
Mm-hmm.
So
So
2024 might be different.
true. Might be some opportunity there in terms of interest rates finally stabilizing and maybe home prices too. Like the one we just saw in our group that a lot of analysts, well, that was a report from realtors that there will be a little bit of a price decrease, mostly here in Texas, actually, big cities here, namely Austin, Houston, and Dallas, and San Antonio as well. So we'll
Mhm.
see. We'll see. It's all projections because sometimes all that doesn't come true, or partially. So we'll see. So we're having issues pulling up the Reuters fund flows, but you know what we like to do here in this podcast? We always try to follow the money. So this is from Seeking Alpha. So this was just published today. So it comes from the same source. Reuters is actually owned by Lipper, I think. And so this is what it said. So it says here, investors were overall net purchasers of fund assets for the 6th week in a row, adding a net $63.6 billion, the largest weekly inflow since March of this year. So a lot of money still went into money market funds, close to 68 billion, to stocks. Stock funds actually lost 2.8 billion. A good amount of selling had happened, looks like. Commodities as well, negative 400. Mixed asset, negative. Taxes and bond funds, a lot of selling actually. I don't know what the headline is that for. It kind of confused me. But a lot of selling from the stocks as the market had gone up. So maybe some people taking already some profits. So market recap, no, that we already did the close recap.
Well, I won't be surprised if people have been taking profit. Of course, they've been waiting a while for things to go up.
Mhm.
It would be a good time to take profit.
So we're not paying attention to the ETF, but conventional equity funds. See, the conventional stock funds saw outflows of negative $5 billion, 94th straight week. So this is kind of like contrary to what we have been following. So it would require us to have some adjustments onto this, I think, Wawi, because I think for some reason Reuters have stopped sharing freely their fund flows data.
It
So
could be it could be a late data that we're
yeah.
seeing.
So I think
Data.
would kind of throw us off if we blindly follow into this. But we're gonna find a better source in a little bit, maybe next coming days or our next podcast. But yep, as what we have discussed, bar chart is a really good source for several snippets of the stock market information. So this was just published a couple of days ago. The money market is now at $5.73 trillion. A lot of money are still in the sidelines, missing a lot of this increase in the stock prices. So when will they play as a FOMO remains questionable, because anything, this will further propel the stock market should they try to chase the ongoing rally that have started all close to a month ago now. Right, Wawi?
Yeah, yeah. So we'll see.
And this is a Financial Times headline that was published yesterday. Global stocks record best month in 3 years on interest rate cut. MSCI All Country World Index gains 9% in November as investors rush into risky assets. So, yeah, a lot of money now, FOMO money is coming in. So disregard our fund flows discussion since this was a last minute adjustment and since we cannot pull up the usual data that we can. So same headline from Bloomberg, S&P historic 8.9% rally, blindsides skeptics on Wall Street. So this is what I like about Bloomberg. They're calling their own analysts. They call it analyst skeptics or whoever. Second best November. We just had our second best November since 1980. That's amazing. Opportunity remains for traders to chase gains in December. So here's the FOMO that we're talking about, but this is for traders. So who among the traders have a lot of their money in money market? I don't know. Those usually traders have their money ready, dry as a gunpowder, to pounce on every opportunity. Yep, 1980 was the best. We haven't seen that. November 30, 10.2%. And this month we were 8.9. So what a rally. What a rally that we have just seen.
Let's see how long it'll last.
So this is from bar chart again. So this is a little bit of a doom and gloom chart. US banks are now facing losses of 685 billion. So this is for the banks. So they can hold it actually. Banks, especially the big banks, they can stomach this paper loss until maturity and sell, unlike smaller banks which need the money. So unless all the depositors hit the banks and request a lot of money, then I don't see Bank of America selling a lot of like what do you call this? Treasuries to redeem those to provide savings return. But yeah, just something to keep in mind regarding US financials. But where are we with financials? Let's see. Financials are actually up 10.41% since the start of the year as a group. And for the past quarter, financial actually is the best, second best performing sector, just trailing behind technology. So I don't see a lot of investors getting scared because of this chart right here, 600. It's either they don't know or they have full trust in these banks that they won't fail. Speaking of banks, I guess Wawi, JP Morgan is the most bearish among the group. So they have the lowest S&P price target for the next year, 2024. They're seeing it below 4250, around that area, which is a little bit less from where we are right now. Deutsche Bank and Bank of America sees the S&P 500 at 5,000 next year. So,
you know, like I said, there could be some incentive there for them to drive up the price of the S&P 500.
true.
You know,
Getting
trying to
more,
excite
mhm,
customers to
getting more
join in.
optimistic. Yeah, they're very optimistic for sure. Oh, look at this. Another bank. They're not considered as one of the big banks in Wall Street, but BCA Research sees a likely decline to 3,700 next year. Likely recessionary. So BCA Research,
Now
even
we're talking.
even as low as 3,300.
Well, I don't know. I just can't figure it out. Somebody smarter than me can probably figure it out, right? How to service all that debt, the public debt that we have.
True.
You know,
Well,
that puts pressure on people.
yeah, as long as you're invested in a company that you have great belief in and you've done your research, I think it shouldn't be that hard to stick with those companies, regardless what the economy does. So overview the US GDP, it actually revised higher from
Yep.
2.1 to 5.2. That's more than twice. So
Yeah, that's a big surprise. Yeah, very good. I don't know how much of that is from retail,
probably Black Friday.
from sales to retail, but look at that. Yeah, just shows you how strong, how strong the economy still is.
Highest reading since last quarter of last year. So this is from trading economics, which is very helpful. And you could tell the economy is bouncing back.
Yeah,
So
look at that.
all this time it's been 2.7, 2.6, 2.2, 2.1, slowing down, and then boom, 5.2. So something's going on.
Holiday selling is not yet done. You
Yeah,
know, most people, start buying cars this time of the year.
true. That's
So
it.
all they need is open the floodgates of, the housing market by
Mhm.
lowering rates and lowering prices. Who knows how long that bull run's gonna run when they do that?
Yeah. People might start getting comfortable too with a 5% or no, not 5%. Where are we at in terms of
Oh, it's been like 6.9 in some of the 30 years.
7.09? Amazing. Wow. We have
Mm-hmm.
scaled down from 8.03 just in October. We're now down to 7.09.
Yeah,
That's
bring it down to 6 and whoo, we'll see.
yeah, and personally I think I locked in my mortgage at 5.75. So
Nice.
I think right now even builders are, they've been providing a good decent amount of rates. They're gonna soon face some competition from the banks if this trend keeps on going. That's pretty good.
Right
So,
now, the builders are doing a good job,
mhm,
for people to do that, do their own financing.
right. So now we're looking at the FactSet earnings report. This was published yesterday. So this is pretty good. 98% of the companies already had reported their results. 82% reported positive earnings per share. There's
That's
no,
what we're talking about.
I don't see any recession with these numbers.
No, I don't see it either.
62%, have reported positive sales surprise, revenue surprise. So which is also good. It's more than half.
Mhm.
Um, so the blended year-over-year earnings growth is 4.8%. This will mark the first quarter year-over-year earnings growth reported by the index since third quarter of 2022. So we had a bad third quarter last year, 2022. Well, that's confusing. Third quarter will mark the first quarter year-over-year reported by the index since. So quarter over quarter, year-over-year. Well, skip that. I'm confused.
Oh, we're talking about the fourth quarter over fourth quarter of last year, probably.
No, yeah, they're referring to the third quarter. This is the one
Oh,
that
the
just
third.
concluded. Yeah, regardless, let's go into details here. Um, so yeah, so we have discussed the earnings potential outlook for next year. One of the questions they have is, have industry analysts overestimated S&P 500 for 2024? Um,
Well, with
they're saying reflect
my
the.
feeling on that is they're underestimating.
But remember when we discussed it, there were just a couple of companies, I think it was Merck and another company, that are being projected to earn a lot by second quarter of next year. If we can go back to our, I think it was episode 86, that there have been crazy growth projections second quarter of next year. And if those companies don't meet them, it would be disappointing for the overall Mr. Market. So it will be interesting to see for second quarter of next year, regardless. So topic number 2, analysts making larger cuts than average to EPS estimates for S&P 500 companies for quarter 4. So this is what usually ends up happening. If they lower down their estimates, then the companies can easily beat, and market rewards them as a result. So let's see. Which are the sectors? At the sector level, 10 of 11 sectors witness a decrease in their EPS estimate for this quarter, fourth quarter, led by healthcare sector. Meanwhile, informational technology is the only sector that recorded an increase in earnings per share set. So for this coming report, for this coming earnings results next month or so, February, only one sector is anticipated to register increase in earnings per share estimate. So that's only information technology, so tech stocks. So hopefully they perform well, because we already have low expectations, especially on the healthcare sector on the next quarter. Well, that's interesting information that was provided by FactSet. Yep, there it is. Healthcare materials, consumer discretionary, industrials. Their earnings estimate were lessened, were decreased. quite amount for this ongoing fourth quarter. While the only sector that's being anticipated to deliver positive growth is information tech. Try to find like specific companies that they have any shout outs for, because that kind of helps us.
Yeah, find some, pick some stocks, right?
Yep.
Well, I guess it's just cyclical because it's the winter, and most production probably slows down when people take holidays. Information technology does not sleep; it keeps going. Especially now when AI is rolling in, they're running all these robot, automated AI
True.
stuff, you know.
And
So
they're,
it's gonna keep running.
and they're investing in them too. So the
Mhm.
chat GPT concern, that's another. It could either be a head or tailwind, but Microsoft is in it 100%. So here we go. I think we're able to narrow it down. So for the information sector, technology sector, for this quarter, now we're going back to the present that just happened. Positive earnings surprise by Microsoft, Nvidia, Apple, Intel have been significant contributors to the increase in earnings of the index. So those are, except for Intel, believe it or not, looks like Intel is trying to chime in, trying to join the Magnificent Seven, I guess.
Mhm.
But yeah, those are the big companies. In the financial sectors, meanwhile, the best performing ones, positive surprise, JP Morgan, Berkshire Hathaway, which was vice chaired by, may he rest in peace, Charlie Munger, Wells Fargo, Citigroup, and Bank of America were the significant contributors to the index. For the consumer discretionary sector, the standouts are Amazon, Airbnb, and General Motors. Can't believe
Mhm.
Airbnb is doing good, because I thought there were lots of negative insights on it, like it being banned in New York was quite alarming, I believe. But
Yeah, I'm
regardless,
surprised. Mhm.
mhm,
Yeah, I'm
yeah,
surprised that DNB is on that list. I
yeah,
haven't used
me
DNB.
too. For this quarter, with all the problems in real estate and a lot of expenses right now, I guess people are still buying experience compared to just buying stuff. Okay, healthcare sector, the one that we need to keep an eye on at least. Downward revisions. Here we go. So downward, this is negative for earnings per share. Pfizer, Eli Lilly, and Moderna. Negative surprise earnings for Moderna have been the largest detractors to the index. So those are the standouts of this third quarter report. Energy and healthcare sectors have seen the largest increases in revenues. Wow. Okay. Energy sector, here we go. Energy sector. Oh, okay. So now we're done with the earnings, right? So this is sales, revenues. So for sales, the companies that registered growth, let's start with energy sector, which is, Chevron, ExxonMobil, and Marathon Petroleum. So these companies registered good increase in sales despite the drop in oil, because oil is actually down 20% since the start of the year. So regardless, they're still generating, they're milking it. And Exxon is buying Pioneer, and Chevron also is buying another big company. So we're gonna rush things through. I think we have less than 40 seconds to go, guys. So thank you for sticking with us, and we apologize for the fun flows. Hoopla. For the healthcare sector, Cencora, Centene, and CVS and McKesson are the standouts in sales generation or increase. And utilities have negative sales surprise, led by energy, Southern Company, and Edison International. I guess we're gonna cut things short there. Well, I do apologize for the shortened recording, and thank you so much, Wawi, for joining in today.
Thank you so much, Mark. I think it's going to be an exciting market this December. So hang in there.
Yes, stay positive.